So a quick recap then. Data today coming up in a couple of hours' time, few hours' time. Dallas Fed manufacturing. Apart from that, nothing really standing out that we need to contend with today. The US dollar is range bound, but there is a potential bias here to the downside. US yields looks as though they are exhausting on the bid, coming up into resistance, potential for a move lower. Okay, so on the day itself, we're inside of Friday's range on the 10-year, and we are also inside of Friday's range in the dollar index, but the bias is bearish so far, technically. On the daily chart, this 10-year has come up into resistance in a 50% mean reversion, almost a 61.8. Looks as though it could be tiring, and the path of least resistance could be to the downside. Okay, you've got that W formation as well. We've also got an M formation, but the resistance line, the neckline, is acting as resistance, and we're yet to move in on the neckline of this W formation down here in the 10-year. With last month's highs in sight, this red dotted line, which marries up with the neckline. Okay, so if we are dollar bearish on the day, now remember it being Monday, initial balance day, not expecting too much out of a Monday, nothing on the calendar, but we can be leaning towards a bearish bias at the moment, and that could be positive for risk sentiment and the indexes. So let's just take a quick look at this Dixie. It looks like a complete mess. These are my scribbles from last week, but I've left them on there because it's a reminder. I will clear it up, but it's a reminder of what we were talking about last week. Yeah, we'll do euro dollar in a moment. The Dow Jones, if you recall, we were talking about, and I suggested to everyone to go and do some homework on Wyckoff. But what we were talking about, I'm going to go to a clean chart. I'll leave this on here and we'll come back to it in a minute. So the clean version of this chart. Okay. If you recall, we were looking at this market in its sideways accumulated, well, what I perceive to be a prospects of accumulation, and then we got that spike to the downside. So it left us scratching our heads as to whether this was indeed prospects of a continuation lower, which it still could be by all means. Okay. Essentially, we are still front side of the bearish trend. So this is a bearish trend still. We've had no significant break to the upside yet. Okay, so this is still a downtrend. Blah, blah, blah. Just looking on this indicator here to find the swing highs that we need to break. Let's go out to a 4-hour chart, might be a bit cleaner. Yeah, so essentially it's going to be these highs up here. Okay, so we'll have to move this trend line out to those swing highs. So essentially, this is a bearish market given the lowest low point here. Okay, and then the lowest high was up here. So until we break that level, the bias is bearish, technically, okay, as per swing levels. Now, we've got this W formation on the 4-hour chart, worth noting. There are prospects for a move back in to retest that neckline area as a potential support area. Okay, and we're up into this area of potential resistance. All of this cluster of transaction history. Okay, so that looks technically bearish for the meanwhile. And it doesn't really play into our potential bearish scenario in the Dixie, in the yields. So again, we need to keep an eye on this 2-year yield and see if this potential resistance plays a role in the downside, prospects of a move to the downside, and that should nudge the US dollar lower and lend support to the indexes. However, we're looking at this chart here and it looks pretty bearish. Now, if we get the bearish scenario on the dollar and yields as outlined a moment ago, then perhaps we are too premature in anticipation of a move lower and we're going to start testing this resistance area. Now, if you recall then from um, prior days, I was talking about this area being accumulation, and this could well just be a false move to the downside, aka the spring Wyckoff methodology, the spring, which could therefore lead to a move to the upside. So once we break these highs, we can be in anticipation, pull back, and a continuation. All right. Now, if we go back to the chart we were working on last, I know it looks like a complete mess, but bear with me. Let's get rid of. If we work our way up to the weekly chart, we can see here that this could be a strong area of support, okay, that we're meeting at the moment. We're meeting a trend line support. Coming to that trend line support. And then if we zoom in, and then we've got this M formation, up here that we could be targeting the neckline. So that's that 35030. And then if we scroll down to the daily chart, so that's looking bullish, longer term. And then on the daily chart, we've made a 61.8 correction into that Thursday sell-off. We've done that over Friday, and again we are bid on Monday so far. Now the 61.8 often lends or serves as a resistance, but that's quite a strong correction, and this has legs to go higher. All right, so potentially looking somewhat bullish on the daily chart for the meanwhile. And if we come into the if we come into the 4-hour chart, we've got an M formation, bullish. Well, we've completed that. Now, what we were talking about, we'll get rid of this M formation on the weekly chart. So this white here was the M formation, and we were talking about this being an important area. As it comes up to the neckline, meets resistance, uh, also a 50% mean reversion of that sell-off, and then the 61.8 or thereabouts in around that area. But I circled that area as a key area of resistance. It had a number of confluences. This yellow dotted line, I can't remember what it was. I think it was a weekly. Yes, it was a. Go back to it. It was structure within this weekly candle. So that was an important area as well. But we seem to have had little trouble. Well, it sort of decelerated around there, didn't it? So we corrected, decelerated, and it's just sort of bumping around that area at the moment. But it is technically through that resistance area. So again, that's potentially bullish for the day ahead. So if we see a turnaround in sentiment, then we can be in anticipation of a move up in the indexes, okay, including the US 30. All right, so, and then in terms of the day count, it's on day two. So if we look at the daily chart, we can see that we bottom out here to day one, day two. It's actually a day three. Let's look at the hourly chart. I'm going to clean up this chart entirely. I don't think there's workings anymore. No, it's a day. It's a day two. Friday was a day one of the 3-day cycle. Bear with me. It's a day. It is a day three. Thursday was a very strong close to the downside. Friday we moved back up in. Right, interesting. So it's a day three, and this could go either way. So we've got our supports structure to the downside here. We can actually raise that somewhat because we've formed a new low here. We're moving up currently, breaking resistance. Okay, but we've also got this hourly W formation, so we can expect a retest of that neckline. If we don't completely run away too far, if we do, then we're looking back at this area here being support for continuation. See how we play out. What's the 2-year doing? Starting to come off. You see that 2 years starting to come off? And see how it's lending support to the indexes. Okay. So, question, guys. What do you think we can be seeing in dollar yen with respect to the divergence between the Bank of Japan? Actually, we need to look into what was said over the weekend from the governor of the BOJ. But what are we expecting to see? We've got yields coming off in both the 10 and the 2 year. So what should that be doing to the US dollar? Weakening it, and dollar yen weakening it. Yeah. So we've got resistance at the top, exactly bearish, yes. Resistance at the top. We're moving in on this swing low on the hourly chart. I'm not there yet, but that for me would be the line in the sand to expect a continuation for the rest of the, well, certainly in and around the US, New York Open and Wall Street's Open. again, we've got data coming up, but we've got this imbalance between here and down here. Bear with me, sorry. Okay, so we've got this imbalance that we're leaning towards, and therefore we can have a pretty sharp move through that imbalance into here, 146.40, like that. That's green for support, and a continuation below there and below here. Okay, so that's our outlook for the dollar yen. Um, just drawing the trend line as well. So it's still on a bullish path until we can get below 146.47.9. Okay, once we get below there, we're going to be in a broken down market and we're looking for opportunities to sell high. That's not to say that this can't just run lower, but I'd be in anticipation of a break of this support, and typically what you see is a move back in, and that's where you can pick up a better place to be selling from for a strong, well, strong move to the downside. I mean, it might take a few days to play out, or it could all be over in a flash. Okay, yeah, exactly. So those yields are, which keeping an eye on those, trickling into yesterday's closing price, looking for a break of these lows. These as well. This area really on this 2 year. So a break below that area of support would be do us wonders for going long the indexes, short dollar yen. Um, I'm just taking a pause here to see if there's anything from the Bank of Japan over the weekend. Um, well, nothing jumping out at me really. Okay. Um, get something from the bank. Right, bear with me, guys. Do apologise for the delay. Oh, must have been a dovish outcome, perhaps from nothing, no flip in that. So, right then, moving to gold. Where are we then? So, okay, this was from Friday's workings. Friday we were talking about how it was up on level 3 and we were in anticipation of the move lower. We got that in the Wall Street move back up in, so there are prospects of a continuation to the downside. So just to play this out, so if we go to a cleaner chart, that would equate to a stronger dollar, but hold on. Right. So it's moved up. Um, so that was last week's opening balance. Okay. So this is why today is significant, and I'll explain why. So last week's opening balance, last Monday. Okay, that was the range. And what we can do with the range as we set up for later in the week is see how far we've come out of that range. And what we like to see on a Friday is three levels of rise. So if we draw, so that's level 3 up top, level 2, level 1. So it rose into level 2 and then it rose into level 3, right? And it did that in 3 pushes. So it pushed out the range here. So there's 1, 2, and it came up to the high 3. 3 pushes into the high. And that gave us our bias for going short on Friday. Now we've come back up into level 3. Okay. And we've tested about halfway up, and we're meeting what appears to be a resistance level in and around these highs. Now, if we zoom in on what we're dealing with today, um, so with Fibonacci, we are coming up close to the 78.6. And these highs, this order block of that move. So the market fell strongly, and the move originated from up here, and we've come back into where it originated from. So those of you that have been following this methodology of analysis will know that that was the displacement, and we expect to see a retracement back into the displacement, the origin of the displacement, aka an order block, where institutional money is supposedly protecting that price. Or, in other words, if they've got a big chunk of change to do in the market, and they might not do it all at once, but um, sort of stagger it over a number of trades, then they're always looking for that best price, and they're in anticipation of the market coming back in towards where they were selling from, and they can do another chunk. And if they do another chunk, then the expected outcome is a continuation to the downside. Okay, so that's what's called an order block. So are we going to see the continuation to the downside? Now, again, that doesn't really play into our dollar bearish thesis. So keep an eye on this. If we find that the dollar does firm significantly and yields come off, then this bearish outlook here will soon be invalidated and we'll be looking for the continuation to the upside. But for now, just by the technicals, it looks pretty bearish to me. We're taking out these lows here. Trying to. This is the hourly chart on the 15-minute. I'm actually going to move this down to here. So this is the low point. Sorry, the daily chart. Just want to look at that again quickly. So we've got 1, 2, 3, 4 days of length in the market to short into, and these levels. Yeah, we broke that low there. Swing point there. So I mean, it's looking pretty bearish, I have to say. So 15-minute chart. Too many lines in this chart. Right, so let's get below yesterday's closing price, and it's all a bit congested. It's difficult to map out, but a break below 1913. We are in a broken down market. We've got the change of character, as you can see over here. Let's break here. So tricky one really, because you've got all of this support down here at yesterday's closing price, yet I want to be a seller up high, because we're technically in a broken down market, right? We've broken this resistance, support, trend line support, and we broke that over here. That moved lower. We've got potential resistance at the point of control in today's choppy range. And we're coming up into that. But we've got a dollar bearish scenario, and we've got support down here, and that's why I'm reluctant to suggest that we've got a setup to sell at the moment. Instead, what I prefer to see now at this point, so we've got this is the anticipation, right? Impulse correction, continuation to the downside, breaking Friday's lows. However, perhaps we've got more to do on the upside before that could play out. So with this support area here, maybe what we need to see in gold is a break of the resistance, move up, and in doing so, creating more structure, and then we could see the move lower. So the structure point would be breaking this resistance, taking on this resistance, potentially picking up some liquidity, um, coming lower to retest this old resistance as support, potentially moving up again to test whatever peak formation we get out of this, maybe even higher up into these highs, maybe lower, but whichever way, we'll be looking for a break of structure to then move lower. So we can see some dollar weakness here for the day ahead, perhaps, and then weakness in yields. That would give a sigh of relief, some momentary sigh of relief in the gold price, perhaps to move up, and then we might see a turn around the dollar again, and so forth. But that's all speculation, no idea, you know. But at the moment, I can't be selling gold with this support at the moment. If we break support and then move back up in, then I'll be a seller. Right, so that's where we're at with gold. On Thursday, it came up high, failed, 1, 2, day 3. So this is day 3 in the 3-day cycle. Um, Lower highs. So yeah, tricky one, guys, with gold at the moment. Start of the week, maybe just leave it, let things set up, or come back to it nearer the Wall Street Open. Uh, Talk about it in the chat room and see how the land is lying. At the moment, I'm stuck on it. Uh, Cable, and we're coming to Euro shortly. Okay, so with cable, where are we? Let's look at the daily chart. Oops, wrong one. Right, we are below last month's lows. We've got a displacement here, change of character, prospects of a correction to the upside that would play into our weak dollar thesis for the day ahead. Right. So we'll pull up the Fibonacci on this. 38.2 and the 50% aligns around last month's lows. So maybe we're going to come back for a retest of that breakout, those highs from Friday. Okay, so we've got that M formation, the neckline in between the 50% and 61.8. So we'll just extend that out a touch. Just keep note of those lows there. All right, so we're looking for a move up in sterling. Right, so potential peak formation at that low there. So that would be expected to hold as support. We are moving around, yes, Friday's closing price. point of control up in here. So we need looking for a break of 126. That's the point of control. And we may as well mark up the swing high in the hourly chart as resistance 126.11. That's our resistance that we're looking to break. Now, technically, we would still be in a bearish trend until we break. I'll show you in a minute. Let's mark up the chart. Until we break this swing high point up here. 126.54. That still gives us plenty of room to test that in a 50 pip move. If you catch 50 pips on a session, you're doing well. So that would be take us up towards last month's lows as a target. So we're looking to trade within here. And ideally, we want to be buying low to go high. But we still need to see a break of structure. We still need to see a break of, at the moment, 126.10. Now let's see if we can't find something on the 15-minute charts. Right, so you could argue that we've already broken structure over here. Okay, so now that resistance would be expected to act as support. We're in level 1, and we're looking to go up to level 3 on the session. We've got potential resistance at that area of breakout. So this is displaced, so we're looking for it to move back into the origin of the breakout. This is essentially all of this area here. So we're coming up close to that resistance area. So a move into that area could result in a move lower. Then we've got to be cautious that this doesn't just continue and break this support area. And what we'll be looking for is for the price to stabilize within the lower end of this space, so in this support area. And you'll be monitoring price action on, say, the 5-minute chart, the 1-minute chart, or even taking it on the 15-minute chart. And the closer we get to the Wall Street Open, the more likely is that we're going to see a breakout of either to the upside, which is our bias, or to the downside in a continuation of this displacement down, correction up, potential for a move lower, or if we stabilize, so down, we've come up, if we stabilize in and around here, then we could be going up. Bear in mind, we are still front side of that bearish trend, so ideally, we want to be in line with that trend, but that's not to say that we can't break it and move higher. But just be cautious of this because we've got that resistance, that trend line. So keep it in mind. Right, finally coming to ones that you're starting to ask for. The euro. Where are we on the euro? Down here, was it? It was the first green day when? On Friday, I believe. So looking for the move up. Let's have a look if we to clean up this chart, I just want to move out, leave the drawings off for a second. I just want to see why I've got them on there in the first place. Okay. Right, level 3. 1, 2, 3. Right, so essentially I was indicating that we're up high, moving out of this down here. Had 1, 2, 3 pushes into the high. So what we're looking for is a move lower. So let's clean this chart up. Let's go to a weekly time frame. So we're targeting these lows. Overall, we are below this area of internal structure, potential resistance. However, we've got 1, 2, 3, 4, 5, 6 weeks of bearish closes. Might we be seeing a correction into there before we come down, or are we just going to continue lower? Still on the front side of the bullish trend. Okay, right. Daily chart. So it's very worthwhile knowing what dollar yen. Sorry, what? Oh no, lost my train of thought. Forget that. Okay. Let's get distracted by the CAD yen and Euro yen requests. We just did dollar yen. Bear with me. I'll come to those in a moment. So daily chart. Right, front side of the bearish trend. Still below resistance on the front side of the weekly bullish trend, but are we about to come in to test that trend line? Technically, it will still be bullish. Would have to move it down because we haven't broken any structure to the downside apart from over here. So we are backside of this bullish trend, now bearish. So, right, so we broke that structure there, yeah? So we are bearish, shorter term for the moment. Front side of the bearish trend, below counter trend resistance, below resistance here, which we broke. Support we broke, so below that. So for the moment, I'll be inclined to say that this is pretty irrelevant, this bullish trend line at the moment. We'll get rid of that. But it's worth noting, until we break this swing low, the weekly chart is still in an uptrend. So we could come down to this low and continue up. But that's pretty irrelevant for the day ahead. So I just want to mark out that. So impulse, displacement, correction back on the inside, continuation lower is the thesis on euro dollar. But for the meantime, this correction could be pretty premature to be expecting a continuation to the downside. So maybe we're going to see a move up, a deeper test of this bearish impulse. So if that's the case, then we've got the 61.8 that aligns with those lows, right? So could regard that as potential resistance. So we're looking for a move up for the day ahead. We've already had a sell-off, so perhaps we've got some imbalance to come up and test. How we're doing on the 2 year, on the hourly. Is it still bearish? Looks to be. Right, so it's testing this support area. Okay, so that's good for our euro bullish outlook. All right, guys, so looking for a move up towards the 61.8 for the day ahead. We've got support in here at 108 or thereabouts. Between there and down here. So looking for support to hold for the move higher. From the lower time frame, the 15-minute, zoom in on that. Yeah, it's a shame really that we're sort of mid range of that Friday range, as with most pairs. Ideally, we want to be buying low to come up, but maybe it's just going to be a scalp to the upside. It's not ideal, is it? We've got this resistance up here, 50% mean reversion point. I'm not seeing much room here to maneuver at the moment. So just keep an eye on this one and see. I'd rather be buying low to come up. Be nice to see a break of those highs to come down and then come up and close firmly bid. Let's have a look where we are in the day count. So in fact, we could say that we want to see a break of 108.40, and that will give us our peak formation on the downside, making this technically a swing low on the daily chart. So it gives us a higher target. Right, so I think that's what we can say about this one here. So for me, it's not giving the best setup potential until this resistance is broken. Um, and I want to be buying below 108 for sure. But maybe it's not going to give us that opportunity and just fly. Okay. So nothing really standing out for me here to participate in at the moment. Right. I'm going to move to US 100. So that's running higher. Not ideal before the open because if we've got a bullish bearish, we'd rather see a sell off before the open that we can uh, move into. Generally speaking, if you see the pump before the open, you're going to get the dump in the open. But let's just keep an eye on it. So technically, okay, so we are moving in on the 50% mean reversion of the bearish impulse. We can move higher in towards the 61.8. It's a strong correction. So bearish impulse, correction, support above Friday's closing level. Perhaps we're moving up into the 61.8, and we can look for shorts, maybe for a scalp to the downside, or we're just going to continue higher in line with the bullish thesis with this W formation, the neckline up high. Did I say W formation? I meant to say M formation. I didn't say M. M formation. So perhaps that's what we're going to see is a continuation to the upside. So early days yet in the week, but this weekly candle could be destined higher. And we're catching it early if we get involved on a swing today, buying low, but on the day itself, like I said, I would rather have seen a move lower so that we could ride it high. Trying to chase, I don't like chasing moves that have already taken off because of the time decay, and the higher up you're buying, the more likely it's going to come down and implode on you. So we've still got time for this to drop. Maybe we're going to see the drop, and that'll be great, and then we can get involved and see if it doesn't move up in the Wall Street Open. So keep an eye on that. And that would be the same in the S&P. It's actually exactly the same setup. Right then, now I'm going to go towards CAD yen. I'm being asked for Euro Yen, and Euro CAD, and then we'll call it a day and get to the screens. Slow reaction here from the website. I didn't pick up on what the data was. No, that's not good. CAD Yen. Right, CAD Yen, CAD Yen, CAD Yen. Up high. Let's go to the daily chart. I'm sort of wedged in here, coiling. Prospects of an explosive move to the downside, perhaps. Up in resistance. W formation on the, what's that, the monthly chart, perhaps. That's the weekly. Got that W formation to the downside. Prospects of a move into the neckline. Longer term outlook. And then weekly. Wedged, coiled, W formation, support, and here. Okay, on the weekly, and coming in on the daily. Testing resistance. We're actually above resistance, old resistance. And there, zooming in. Let's clean up the chart entirely, in fact. So zooming in. So we seem to be making a support here. We're trying to break higher. So we're trying to move higher at this point. So on the day itself, we've got prospects of a continuation to the upside in line with last week's Wednesday's peak formation low. Failed to continue. We moved back inside. So we've got day one, day two, day three consolidating. So that in fact makes today day three because it was an inside day on Friday. So we count that as Friday and Monday all is the same day in the 3-day cycle. 1 to day 3 to move down into day 1 to longs. So the thesis is bearish on the day count outlook. But we are trying to break higher. So again, tricky one. Monday, not always the best days for trading. I use these days to set up for the rest of the week. But if we're looking to trade this pair, then I think I'm going to go with a bearish bias. But we need to break these lows. We've got peak formations, M formations up top, which are essentially bearish. So peak formation. Oops, I've done that wrong. Okay, like that. So that's all the topping pattern. M formations up top. M formation up top. Yeah, double top pretty much in terms of, well, on the 4-hour chart. 1, 2, double top up top there. Right, lower lows, lower highs, sorry. Room to drop. Right, so that's my outlook for CAD yen, Euro yen. Probably more consolidative because the euro is looking pretty big. And so is the yen. So that's the 4-hour chart we're looking at. Let's look at the daily first. So a break of structure here. This move Tuesday and Wednesday, and we've got the correction moving up. So Tuesday and Wednesday. So Wednesday broke those lows. Break of structure. We've come back in on the displacement, which is to be expected. 61.8 mean reversion, Fibonacci retracement, potential resistance. So looking for this correction to decelerate today. It can move higher, but we're looking for the deceleration, and that's what we're starting to get with that wick. Okay, so potentially moving lower here, guys, in Euro yen. But we're still on the front side of the bullish trend. We need to break these lows, which we're trying to do at the moment. Right, so on a 15-minute chart, we can start monitoring that. So potential high of the day. So peak formation. As you can see, these are the lows, the higher lows before the higher highs. So that's acting as support currently. Now we might find resistance here. So any attempts to move up could prove to be the catalyst for the break of these lows. If shorting, be wary of these lows here. And these lows down here. And all of this in here could prove to be an area of support. So you might be inclined to wait, or if you're going in, to go in small and scale in on a break of this level. But because until we break that level, I think it's going to be a sticky situation if you short, as you may find that demand starts coming in and driving the price higher again. But below here and into here, I think you're pretty safe to continue with the move, because it could be, there's nothing really getting in the way. I mean, you might find some support in here, of course. Okay, now we're going to go to Euro CAD, and I think we'll call it a day. I think we've got a pretty good bias for the day ahead. Let's look at these yields again. Right, nice, moving away. So we've moved into trend line support, but we're um, technically we're on the back side of this trend now. So bearish. Now what we'd like to see is a move up ahead of the Wall Street Open, so that we can ride our trades lower or higher, whatever you're in, against the US dollar. Okay, so see how that pans out. But we're looking at Euro CAD now. Fair bit of support in Euro CAD at the moment on the downside, but looking bearish on that daily chart. Nothing really jumping out at me, I'm afraid, on Euro CAD. Yeah, for me, it needs to break below 146.28 to seal the deal on the downside. Meanwhile, we are trying to move up. But no bias either way. 10-year has broken Friday's low, is it? Good stuff. Right then, guys. So we'll wrap it up there. May the markets go with you all. Unless there are any further questions, we'll call it a day, and we'll get back to the chat room and start monitoring as we get closer into this Wall Street Open. Okay, guys, thank you all very, very much for being here as always. It's a pleasure, as always, to interact with you guys. Thanks, Vincent. Thanks, guys. Okay, thanks, Hill.